right there, everybody. Well, thanks a lot for joining me on this Tuesday afternoon market recap. Quite an interesting candlestick today. Again, what we spoke about over the weekend, it is playing out right before our eyes. You can see here, this is the chart of the NASDAQ today. As at the close on Tuesday, we closed down 118 points. We have been waiting for this type of move for roughly 2 weeks now. Last week, we were expecting the markets to more or less be unchanged, which is largely what they were. And then over the week just gone, we spoke about this candlestick here and how it was really leading to potentially that of a deeper correction to close this open window. Also, just to take you one step further, of the three scenarios in terms of price action, conversely, or contrarily to public opinion, this is still going to be the most bullish of the three scenarios. Number 2 and 3 were slight variations of either a straight breakout of the all-time high immediately, or the second would have been a sort of a less of a deep sort of correction, and then of course the impending bounce. All right, so now that we have actually come on down on the NASDAQ, we've closed definitively this open window here after today's session. It opens up the potential, all right, for the NASDAQ to again move into this type of directional movement over a prolonged period of time. However, the big difference between this is that during the month of August, even into the period of September, volatility is starting to be sucked out of the market. And what I mean by that is, once we do base out around this area and we start to turn, once we see the rally begin to develop and build, we shouldn't see, right, very strong gaps like we did out of the support area that we built and established during the period of August. That is what you need to look for, okay? Number one, we've been expecting this pullback. We've spoken about how it's going to influence our top 12 individual trade list, how naturally a lot of those shares are going to be brought down as the market indices pulling back down to close their windows. Now, again, as at the end on Tuesday or the close on Tuesday, if you pay attention to the high of this candlestick here on the NASDAQ, you can see that it's 7,981 points, and the low on this candlestick here is 7,969. So we've overshot it. Again, we're right around that psychological round number. We've been calling for essentially the 8,000 back test. That has taken place more or less today. The problem becomes still, all right, I'm just going to show you this on the Dow Jones and the S&P 500, is that we're probably going to see a little bit of mixed markets for the rest of the week. And what I mean by that is the NASDAQ may not actually sell off down all that much more now that we've closed the window. On the Dow Jones Industrial Average, you can still see that we have, right, a pretty big sell-off potentially to come on back down to the high of this candlestick, which is 26,362. All right, let me just repeat myself. 26,362 points. We're closing at 26,807. So again, we've got over essentially 500 points that the Dow Jones needs to or should potentially fall to actually back test, okay? And again, it's not only, of course, the gap theory, all right, or the blending of gap theory. It's also the traditional psychological retest, the 1, 2, 3 breakout pivot, and the backtest of traditional resistance, which is giving us, of course, the confluence that we've been referencing over the past couple of weeks, right, as we've broken out above this resistance area. So again, I tried to speak about the psychology of this move over the weekend, all right, and how it was probably going to begin, I don't know, sending you a few demons or potentially negative thoughts, all right, about the market. A little bit of cynicism might be beginning to creep in. But again, I was trying to protect you and guard you from that by warning that this type of move is probably the most probable, you could say, of the three scenarios. And again, after today's session, the outside day engulfing candle on the S&P 500 closing down close to 1%, just shy, obviously. But as you can see here, closing at 2,966 points, we are sitting right on the edge of gap support. All right, so after the original gap up, this was on the 5th of August just here. All right, or actually on the 9th of August after, right, the Friday the 4th. We're sitting right on the edge, once again, like we did do over here on the 10th, of coming back down and closing this open window. All right, that's essentially what we're looking at right now. So don't be afraid. Don't be annoyed. Okay, don't be fearful, and certainly don't be bearish. Okay, because the odds are, like we've spoken about, this is it. And once this closes, we're going to see, hopefully, volatility really end. Okay, or at least we're not going to see the volatility or the VIX rising. And what that is going to do for us is that when we inevitably reverse and roll out of this, okay, there shouldn't be these really extreme gaps. Remember in the past, I've been speaking about the ship in the ocean rocking from side to side. Now, people are waking up and choosing which side of the boat they want to run to, right? Being that of bullish or bearish, depending on whatever the headline is. Well, that should be sort of succumb. It should slowly fade. It should disappear. whereby you're going to see also most likely the 100-day simple moving averages across the market indices as another acting point or anchor point of confluence or support confluence, right? Hold up a bunch of these markets that I'm just drilling into right now with you, right? And it's going to lay the foundation for this rise to take out this little swing high that we've priced in here. But more importantly, the all-time high back in July of 2019. Now, what we spoke about also over the weekend, and I'm sure there's a few people who've thought about typing this in, is that they're probably saying, hey, you've got a lower high relative to where we were in July. And again, it's just the wrong context for such a move, okay? It really is at this particular point. I wouldn't be sort of thinking about that or giving it too much sort of mental energy unless we start drastically cutting below or falling below 7,650 points, right? And that is on the NASDAQ. So don't buy into that. Don't think for a moment that because we haven't just yet, or through to the current time anyway, created that of a new time high, doesn't mean that, again, it's a larger reversal pattern whereby this is the first lower high in terms of a tipping sort of pattern. And again, you can take it one step further. I've heard it before. I've seen it before, in fact, whereby a lot of people are still calling this variations of head and shoulders, macro reversal tops. Again, unfortunately, it's just the wrong timing at this particular time, in my humble opinion. And look, we'll soon find out how it all plays out. But look, we've been speaking about this prior to it happening, which is good. It's starting to develop, or at least it has pretty much fully happened on the NASDAQ. When you think about this, when you think of Apple and Amazon and Google, Netflix, Microsoft, a lot of these tech companies that we follow, even Baidu in our list, you can probably say that we're pretty much close to those of the corrections in those individual companies, which is good. And it's going to be bringing down, of course, the entry point soon, but we need to see that first reversal candlestick down here. Again, the problem is, and the contention is the chasm or the bifurcation whereby the markets are still looking, especially on the Dow and the S&P 500, to sell off a little bit more. Most importantly would be the Dow. If you look at the S&P 500, it already is sitting on that gap support. So there isn't all that fighter for it to actually fall another sort of 25 points, which is largely what happened during today's session. But the Dow itself, you could really see, and because there is a big mix between these two, this is exactly where you would expect to see intra-session a little bit of a crash, so to speak, in the market intra-session. However, a big reversal which creates a lower wick, whereby the NASDAQ and the S&P 500 are sort of, they don't have that intra-session volatility, i.e. the lower wick. They can be a lot more sort of steady and stable at that gap support. Okay? So I hope that makes sense as at the close. If you have any questions, email me. Otherwise, if you are privy to that pro class, I think we can all agree that we are on the trajectory that we thought we would be. And again, if you're looking for a little bit of a psychological sort of pep talk during this period, I hope it isn't affecting you. There's not really much to be affected by, but I understand, especially on the NASDAQ, after you see a long, dark sort of candlestick here to fill this open window, it's go back and maybe re-listen to what we were speaking about, and maybe it'll become a little bit more clearer for you. Okay? So on that note, everyone, look for reversal candlesticks taking place pretty much on the NASDAQ where we are, a little bit further on the S&P 500, and again, that sort of intra-session volatility, which is going to hopefully round out all three of these gap closes definitively, or the final two, over or within this week. And then we want to pay attention to reversal candlesticks. When that shows up, we'll start looking at the top 12 list, because we'll be bringing down a bunch of individual trades. That's most likely going to happen over the weekend. Okay, over the weekend. 3 more sessions to go. Let's see how they play out. In the meantime, all right, just stay patient, stay hungry. All the best, everyone. Farewell.